Thanks for tuning in. My name is Geoffrey Dohrmann, and I'm the Chairman and CEO of Institutional Real Estate, Inc., and we're the publishers of Real Asset Advisor, which is a publication that we developed several years ago to serve the interest of members of the private wealth advisory community, of which I assume you're probably one. I'm hoping you're turning in today to learn about a private market benchmark that has been developed and is currently used by institutional investors to benchmark their portfolios, and to talk a little bit about what it is and how you can use it as a benchmark for the portfolios that you're advising for your clients in the private wealth advisory community. Joining me is Garrett Zdolshek, who's the partner of IDR Investment Management and serves as a portfolio manager of the IDR ODCE Index Fund. Garrett has over 20 years of experience in real estate investing, investment banking, and private equity real estate investment. And before joining IDR as a portfolio manager, he was the managing director for Cortland Partners Limited, one of the largest real estate consulting companies in the United States. Mr. Zdolshek has spoken at a number of real estate seminars and is an advisory board member of IREI, so we know him very well. I'm pretty safe to say that nobody is better qualified to really discuss the ODCE Index. And just to give you a hint about what it's all about, it's an investable index of real property owned by institutional investors through their investment positions in a variety of open-end, or what you might call evergreen, investment fund vehicles. And again, as I mentioned earlier, this is the index to which most U.S. institutional investors and many non-U.S. institutional investors benchmark the performance of their U.S. real estate investment portfolios. So Garrett, first question for you is, shed a little bit more light on what is ODCE and how does it compare to perhaps some other benchmarks that are out in the industry that private advisors might be using.
So Jeff, thanks for having me as always. I think as we look at benchmarks or indexes, it's incredibly important to have a good index for an asset class. And as we look at maybe some of the more common public market areas, for example, the Barclays Aggregate, is a widely known bond index. In the equity markets, for example, the S&P 500 has a very widely followed constituents. And for investors, I think this is really important because they need to understand what their experience could be like investing in an asset class. So especially for groups that are considering real estate maybe for the first time, they really need to understand what should my experience be like investing in this asset class, how do I look at it from a historical basis, and even more importantly going forward, how much risk am I taking, am I getting the exposure I want. That's why the NCREIF-ODCE Index, and we'll delve more into the background on that, but that's why the NCREIF-ODCE Index was developed. It's the most widely used benchmark or index for institutional investors. These investors have been investing in the asset class for a very long time, and so the index has been around since the 1970s, has return history, and it's why the investors look to it to establish what their core private real estate should deliver.
Okay, now I would imagine that most of the people that are tuning in are familiar with the S&P, right? They're probably using that to benchmark parts of their clients' portfolios now. Can you compare the ODCE Index in more detail to, say, the S&P 500 Index?
Yeah, absolutely. So let's break it down from a couple key aspects. First, investment universe. For example, the S&P is looking at tracking some of the 500 largest stocks in the U.S., for example, or globally. The NCREIF-ODCE Index is tracking diversified, open-ended real estate funds. These are private funds, not available in the public markets, largely invested in by institutional investors, but they do offer certain features that provide some liquidity. So, I think the second aspect is the index itself. Who operates it? Who publishes it? So S&P, obviously, for the S&P 500. In real estate, ODCE is published on a quarterly basis by NCREIF. National Council of Real Estate Investment Fiduciaries. We'll talk more about who they are specifically, but they publish this benchmark. They're a trusted source for institutional investors for a long time, and you can go to their website and see their information. The last piece is index construction. How does it measure what the return is? So ODCE is capitalization weighted, just like the S&P, for example. And it's produced with time-weighted returns. So you can see income returns broken out, you can see appreciation return, total gross return, along with total net return for the index. So you can see a number of metrics that are important to investors today.
So if somebody watching wanted to learn more about NCREIF and find out, what do they provide? What do they provide in addition to the ODCE index? And how can they find out more about it?
Yeah, absolutely. So we work closely with NCREIF. It's a great group. They're a non-for-profit trade organization. You can find all kinds of research, not just index data, but research, stories, analytics on their website. And they were really developed over 40 years ago to serve the investor base. So it started with institutional investors, but certainly more and more non-institutional investors are joining as well.
And you mentioned that how the index is presented. Can you talk a little bit about that? What that means, and if I were like a private wealth advisor, how would I be looking at the statistics that come out of that index?
Yeah, absolutely. So it starts with time periods. So you can look at historical quarterly returns, and you can break down those returns by income, appreciation, see a gross total return, and then you can also see the net return after all fees and expenses from advisors. We'll talk more about who these funds are and who they're managed by, but similar to other asset classes, there are investment management fees that come out of these portfolios.
So if I were an investment manager, I'm trying to understand, what is the pure performance of real estate? I could look at the gross numbers. And then if I want to look at what is the net cash flow and total appreciation that's being generated for the benefit of my clients after subtracting out the fees, I can see that too.
Yes, absolutely. And that's a key component of the index for investors to see what fees should be. It's a great benchmark for fee exposure as well.
Does ODCE cover all institutional investment or just a portion?
Yeah, so like most indexes, it really just covers a portion of the investable universe.
So how do they decide who can be in the index?
Absolutely. So there are, I think it's really important for these indexes to always have a rule-based methodology. So first and foremost, for a manager to have their fund included in the index, they have to be highly experienced. They have to manage real estate through a full market cycle. So you have very large, experienced investment groups managing these funds. They have to have a portfolio that's at least 95% based in the U.S. Today, 100% of the assets are in the U.S. They have to be, and again, this is a key component, they have to be an open-ended fund. We're talking private markets, so they are private vehicles, but they have to provide a quarterly valuation, and they have to allow investors to seek to come in or out on a quarterly basis. And this is especially important to have this open-ended feature. Institutions will come in and come out at these NAVs on a regular basis, like all investors.
So how do they determine what the NAV should be?
So there's a long process. It's very detailed where these managers need to use third parties. Third-party appraisers, third-party valuation firms are looking at everything from the asset level up.
And are they constrained by certain standards or not?
Oh yeah, absolutely. Appraisal standards are implemented. Has to be independent. The manager is not the one deciding the final values. And again, this is the process this industry has used for decades. It's well-worn and it's well-trusted.
Okay, so on top of having crystal clear criteria for the benchmark, another key aspect is transparency. Can you help us understand more about the index and how it creates transparency for investors?
Yeah, and again, as part of an index, this is especially important to have transparency and rules around it. So we've covered some of the rules. In terms of transparency, the public markets definitely have an advantage. You can go to a Bloomberg, you can go to third-party data sites and see every stock that's in the S&P 500. You can then research that stock and really understand what makes up that index. This has especially been a challenge for real estate over the years. These are private funds, so information is not publicly available. But NCREIF is a good source to understand what's out there, what's available in the index. Our website as well, we produce a lot of information about the index, being an index provider. But at the end of the day, the rules and the investors are the ones monitoring and analyzing these funds on a quarterly basis.
And who would be some of the managers that are contributing data to the index?
Sure. So there's 26 funds in the index today. They're managed by really some of the very largest, most sophisticated investment management groups in the world. Largely many global firms that you would know, people like JP Morgan, Invesco, UBS, etc. And they all generally view their core real estate fund, their ODCE fund, is their flagship vehicle. It's generally the largest pool of capital they manage. It generally has a lot of resources dedicated to it because it's a really important strategy for them and their client base.
And what would be the largest fund in the index and the smallest fund generally? I mean, you don't have to have it precisely, but generally.
Sure. So, the great thing about these funds in the index is it does capture a wide range of core real estate. The smallest funds in the index are generally somewhere around 500 million of assets. But then some of the largest funds in the index are 45 billion of assets.
Big
yeah, so they look very much like public companies. I think, and this is an important aspect, these vehicles are purely real estate. So they don't include valuations of management or an operating company like public markets. These valuations are solely based on the real estate that's owned in the vehicle. And the managers simply manage them for a set fee. So unlike a REIT where you pay for a CEO's salary and operations and they're building to manage the assets, in these vehicles you're simply paying that set management fee to a third party to manage the real estate for you.
So if I were an advisor and I were investing a portion of my portfolio in REITs, there would be indexes that I could use to benchmark that part of the portfolio. And then if I'm recommending that people invest in either directly or in separate accounts or in joint ventures or in fund offerings, I could benchmark my performance against the ODCE to understand how the private real estate allocations or exposure that I have is performing vis-a-vis how institutional investors are performing.
Absolutely correct, and that's why the institutions have demanded this index for, and used it for such a long time. They do all of those things depending on who they are, and they really want to understand. One of the biggest challenges in real estate is understanding that risk profile of your investment. So it's really important to understand the risk profile and the return you're generating relative to the broader market index.
And I also understand that for some investors, they use the data that comes out of the index as inputs to their asset allocation or asset optimization models to figure out what the right mix is if they're using a model that's based on like Markowitz or things of that nature, yes?
Absolutely. And again, it's consistent with the institutional investors. They're generally using the ODCE index as their asset allocation basis. And then they may go up or down the risk spectrum on top of that, but they're generally investing a good portion of their assets in core real estate because they want that index experience.
So what is the character of the property types that make up the index? How does I know it changes over time because people are buying properties and selling properties that come in or out of the index, but if you look at it right now as a snapshot of time, what kind of properties would they find in the index that are generating these kind of returns over time?
Sure, and that's, I think, another key component to again, kind of make the comparison to REITs. Each of these underlying funds are actively managed. They're typically managed by a manager that's trying to beat the index. So they are weighting their fund differently in many cases against the index to try to create excess return where they see
they're trying to beat the
opportunities.
index themselves, even though they're a member of the index.
That's right, absolutely. So all 26 funds are generally trying to beat the index. So the index naturally rebalances and naturally moves over time based on everything from market perception to opportunity to better risk returns. So today, for example, the biggest sector is industrial. The second biggest sector is apartments. And then you have office, retail, and other. And other is a fast-growing sector. Things like life science, self-storage, medical office have all been strong performers. And so we see these funds buy more and more of it on a quarterly basis and maybe dispose of some less attractive assets.
Okay, and how about geographically? How is it dispersed? Where is the concentrations there?
Sure, I like to say it's the smile of the U.S. It's the higher growth coastal markets. The biggest exposure is to the west. And that's not all coastal. It comes all the way to Colorado and Arizona. But again, sunshine states with high growth typically is where the managers want their assets. Down through the south, through Texas, Florida, and then up the East Coast to, again, some of the more traditional various entry markets like New York, Boston, etc.
So how are the portfolio managers of these particular funds going about? Do they have a systematic approach to kind of constructing the portfolio? How do they decide how to mix up the assets? How do they decide how much leverage to use and all that sort of thing?
Yeah, so within the constraints of ODCE, that's a great part. These managers have the ability to develop their own processes and procedures. Some institutional investors will pick a couple because they want to outperform or try to outperform. Others will simply index because they just want that broad-based exposure. So the underlying managers themselves have a wide range of tools and capabilities to move their portfolios. They will leverage their portfolio anywhere from today 12 to 28%. They can't go over 35%, by the way. That's one of the rules. They will invest a little bit of capital in maybe non-core strategies. So non-core deviating from the traditional stabilized income producing asset.
And again, an example of a non-core asset would be?
A build-to-suit, for example, of maybe finding some land and building for an Amazon center. Okay. It's not in place today, but it will be in the future. So they'll take a little bit of excess risk. Today, the managers take no more than 10% non-core exposure in their portfolios, and some take none. So again, some portfolios may be a little more core-like, and others may have a little bit of that non-core exposure.
And what would be some of the characteristics that lead to outperformance?
Yeah, and that's, again, a key aspect of the index can help understand these things. The biggest drivers today, and I talk a lot about this in our webinars on kind of the ODCE update every quarter, the key aspect today are portfolio weightings to property types. We've seen unprecedented growth and stability in industrial. I'd say that's followed by apartments today, but overall, these sectors cycle like all assets, and I think as we go forward, we're going to see asset selection being a more important aspect. So, which markets are they buying assets? How good are the assets? The quality? They all factor into that portfolio return. And again, real estate is challenging there because there is less data. It's private markets have less data and understanding, which leads to opportunity and risk.
So, if I'm a private wealth advisor or a taxable investor client of theirs, and I'm interested in learning how to apply this benchmark to my portfolio so I can measure up and see how am I doing or how are my clients doing in the recommendations that I've made. How would I use this index?
Yeah, so just like the institutional investors say, that can look at a return stream and say, would this have been beneficial to my portfolio? And just as importantly, historically, I think even more importantly, going forward, do I like the aspects of real estate? It generally sits, core real estate sits between stocks and bonds in terms of it provides some current income, but it also can provide some appreciation like the equity markets. Today with inflation still low but rising rates, we're seeing more demand than ever, for that type of stability and that type of return profile.
Okay, so if you're a private wealth advisor and you're interested in following NCREIF and the ODCE index, Garrett and I do a quarterly update on what's going on every quarter after the ODCE files its returns. So that's a wonderful way to stay tuned in. If you're a subscriber to our Real Asset Advisor newsline, which is free, you can just go on our website and sign up. You'll automatically be invited to those ODCE index updates. If you are a subscriber to Real Asset Advisor publication, which again is free if you are a qualified private wealth advisor. It's a controlled circulation publication, very common in business publishing, B2B publishing. You can subscribe to Real Asset Advisor and get written data about what's going on, not just in the ODCE index, but in the NCREIF property index and in some of the other private market indices, as well as NAREIT and all of the various indices they provide, and some of the other debt-oriented indices. So, wonderful resource for those of you who are advising individual investors on investing in the private markets in general, and real estate in particular, and certainly any of the real asset classes. So thanks for tuning in.
Thanks for having me. Thank you.